So should I pay off my house or should I invest? This is a question a lot of people have. And not only that, this is a question that was posed to our friend Dave Ramsey. And his answer sort of baffled me. You know, when he talks about his baby steps, get all your debts paid off first, and then the last step is pay your house off. But for what reason are you paying your house off? What then? Now, there are some people that literally have this fantasy that when they pay their house off, they're going to be living a much better life. But when you really think about it, if you pay your house off today, what changes in your life? You still have utilities, taxes, things are still going to break, and your house still remains a liability. Now it's time to actually make the money, the equity in this case, go to work for you. Maybe now we should invest, right? And Dave always loves talking about mutual funds and investing money, but let me pose this to you. Right now, we are in 2021. To be specific, it is November of 2021. We're almost ready to close out this year. And this whole year has been a crazy, crazy year in the market. Look at this. This is where we're at. Remember COVID? When COVID happened, the market tanked, as shown right here on this chart. So you can see we just pulled this up. This is a 100-year chart of the Dow Jones. And you can see it's kind of done ups, downs, ups, downs. This is the Great Depression. If any of you remember or have read about it, it was pretty bad. It's like a 90% crash in the market. And the market has kind of done nothing from that point all the way here into beyond the 50s, almost the 60s. So from 1929 almost to the 50s, that's how long it took for you to get back to where we were during the Great Depression. So now let's fast forward a little bit forward. Remember in the early 2000s, we had the dot-com crash. It was a 3-year hellacious bloodbath in the markets. The markets just trended down, down, down. And look at how long it took just to get back there. It took us all the way to 2007 to get back to almost the levels that we were at in 2000s before the dot-com crash. But then the 08 crash happened, and that was a doozy. Whew! If any of you remember the 2008 crash, that was a bad one. We got back to where we were at. But it took all these years, it took all that time just to get back where you were at. Dot-com crash took all that time just to get back where you were at. Great Depression took all that time, over a decade, to get back where you were at. Is that how you want to play this game? Do you want to pay your house off and then all of a sudden start buying mutual funds, get with one of those certified financial planners that Dave always talks about that's going to do nothing but put your money in the market? And if you put your money in the market today, where are you putting your money in the market? Are you buying low? No. Are you buying high? Absolutely. This is the highest point the market's ever been at. Look at this line. Like anywhere else in history, have you ever seen a line go straight freaking up like that? We call that a hockey stick. I call that speculation. I call that smoke and mirrors. I call that bullshit, because this isn't real. It might look real today because you're in the moment. So if you were to invest instead of paying off your house, let's just hypothetically say that, you are absolutely buying into the stock market or whatever investment you're buying at the highest point we've ever been at, by a long shot. COVID did nothing to the markets but basically spring-loaded because everybody had disposable money, everybody's scared of cash because of inflation. They're piling money into the markets. Just like the 80s, wherever that was, which was probably somewhere around right about there. So we have to understand that if you're going to invest, man, use your head. Be logical. If you're going to buy mutual funds, as Dave suggests, now might not be the time, because what's going to probably happen next is this. You are probably, maybe not that drastic, but let's kind of get to it. You are probably going to have a fall off of the market between 50 and 60%. Now, you don't need to take my advice. History proves what's going to happen. I'm not any smarter than any one of you, except for I know how to read a freaking chart. And I also understand how to follow patterns. Folks, if you're going to invest in the market right here, today, November of 2021, or even next year, which might be worse if the market keeps going up, you are setting yourself up for a major failure. Oh, but Chris, hold on. The market always goes up. Over the long haul, if I invest for the long haul, the market always goes up. Very true statement. But how did it feel there? Probably not good. How did it feel there in the dot-com crash? How about 2008? How about when COVID hit? How did that feel? So why not just sit on the sidelines and watch this whole thing unfold? Sometimes people watching is really fun, and when the whole market crashes and you're sitting on the sidelines doing other things non-correlated to the markets, maybe you can look at it and say, man, I'm glad I didn't get back in. I'm glad I didn't just choose that choice of investing. But now let's bring this all together. So we talked about why now might not be the time to invest in the market, because you are absolutely buying high. And is that what you're supposed to do? No, you are supposed to buy low. And when would you have bought low? Here, 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 here. How about when COVID happened? And what's about to happen? That's when you should buy. You shouldn't buy now. It's a dangerous proposition that you'll probably lose money. And hell, I'd hate to have you pay your house off, also do the investing, and then all of a sudden all your investments lose. So now you got to remortgage your house at a higher interest rate. That's another losing proposition. But we're getting in the weeds here. Let's peel this back one. Your dollars, they're worth the most today. So if you put them into your house and pay your house off, and then all of a sudden you just got a house that's paid off, whoop-de-doo, nothing changes. You just have lazy equity. You have lazy money sitting there. So that just doesn't excite me. But what we could do is we could tap into that lazy money and we could send that money to work. Because I love making money work. So if we send that money to work in things that are secured, because then we have to also follow the laws of wealth, and we have to secure that money. So if we're going to send our money to work, we should send our money to work somewhere where it has security, where it's protected, where it is not at risk of the stock market. Because, hey, listen, this is more than likely where the stock market's going. I just can't tell you when. Is it 2022? Is it 2023? All I can tell you is it's coming. So if you're going to take money from your house that you paid it off and move it over to invest, why don't you just wait a little while until the market drops? And in the meantime, let's send our money to work in better places where there's less risk. And everybody always says, well, what are those? How do I do that? Well, there's a lot of them. You could take some of this money and you could put that money to work in private banking. You could then use this money to then go out and finance cars yourself, become your own bank. Like, I don't have the hat on, I have a haters hat because, hey, we're talking about Dave Ramsey, so I felt the haters need hugs hat was more appropriate. But we could do so many things to make this money work. We could lend that money in a first secured position. Oh, Chris, I don't know how to do that. Well, let me ask you a question. You don't know how to be the bank and lend money yet, but you could learn. But you say, oh, I don't know how to do that. That sounds risky. That sounds a lot of work, hard work. What do you know about stocks? Do you know how to read a prospectus? Do you know how to read all about the fundamentals of the companies you're investing in? Do you even know what that mutual fund has in it? Do you know what the fees are? Do you know what you're paying to have that? Because it's probably north of 1%. Do you know the impact that 1% fee has on your portfolio over 5, 10, 15, and 20 years? Oh, you don't. So you're telling me that you're investing in the stock market at a dangerous time and you know nothing about this, but you're saying that lending money in a first secured position is high risk and dangerous and oh my God, I don't know how to do that. You don't know how to invest. So why don't you just learn how to be a good lender? I'll tell you this. Look it up. Google it. Lending in a first secured position on real estate is way, way safer than putting money blindly into the stock market if you don't know what you're doing. But again, that might not be the thing. But I bet you all of you are driving cars. Whether you're retired or not, all of you have a car that you use day in and day out. And let me ask you, every month when you write a check for that car, who is that check going to? Somebody else's bank, isn't it? It's going to the Wells Fargo, it's going to the Citigroups, it's going to the Bank of Americas, it's going to whoever financed your car. Oh, and are you paying them principal and interest? You are. Why wouldn't you just use this lazy money to finance your car and then take the same payment you're making for the car and take that money and put it back where it came from in your bank? Now, what is your bank? Well, we talk about this all the time, and I've got other videos you can watch. If you subscribe to this YouTube channel, there's lots of videos that talk about how you can be the bank, but we're just talking about your house. We're talking about using the equity in your house as your bank. That's it. I just am trying to teach you that it's smarter when you make payments back to yourself versus making payments to somebody else. So let me break this down to you. Let's just assume that you're a business owner. Whether you are or you are not, let's just pretend that you're a business owner. You're an entrepreneur now, and you own a chain of restaurants. Where do you go to eat mostly? Do you go to other people's restaurants or do you go to your restaurant? I bet you go to your restaurant, don't you? Okay, let's go round two. let's say you got a terrible haircut like I got right now, okay, and you need a haircut, but you own a salon. Are you going to go to somebody else's salon, or are you going to go to your salon to get this stuff fixed up and get a nice haircut so that you don't look sloppy like I do right now? You're going to go to your salon, aren't you? Why? Because you own the business. You own a gym. That's right. And you love working out. So are you going to go to somebody else's gym, or are you going to work out at your gym? Of course you're going to work out at your gym. So now let me pose one more question to you. If you owned your own bank, are you going to make deposits in somebody else's bank? Are you going to take loans from somebody else's bank for the things that you want? Are you going to take withdrawals from somebody else's bank? Heck no. You're going to go to your bank because you own the bank. Why wouldn't you make your deposits in your bank? Why wouldn't you take money from your bank?
So you win twice, brother. It's good biz.
You already agreed that if you owned any of those businesses, you would frequent and visit and do business with your business. It only makes sense. So with your money, it only makes sense that you should become your own bank. And I always talk about it as BYOB, become your own bank. So when we're talking about should I pay my house off or invest, I say neither. I say, let's just use your house and turn it from a liability into an asset. Heck yeah, isn't that what banks do every day? They turn your deposits that you give to their bank into assets by lending that money out. So let's turn your house into an asset instead of a liability. Whether it's paid off or not, let's use that lazy money. And then when it comes to the investing side, instead of making a decision to pay your house off or invest, let's go one step further. Let's watch the markets. Don't even be smart about it. Don't study the markets. You don't have to know what I know. But let's just wait for this. Patience is a virtue that all of you, for some reason or another, have forgotten about. It's a really important thing. You want to invest money? Be patient. Wait for the opportunity. Watch the big money. Watch the Warren Buffetts. Watch the big investors like Ray Dalio. Watch the guy that The Big Short was made after. Because I'll tell you something right now, they're not buying into the market like everybody's telling you and like Dave Ramsey's telling you. They're taking money out of the market. And they're waiting for the real opportunity, which is coming because they are being patient. You are not. Learn how to be the bank. Learn how to take back the money that you're giving away to everybody else's bank and put that money into your bank. Whether it's your house or whether it's one of those specially designed and engineered whole life policies, those privatized banking policies using the infinite banking concept. Whew, that was a mouthful. Why don't you Google all those? Privatized banking. Why don't you Google the infinite banking concept? And why don't you Google Boli and Coli, B-O-L-I-C-O-L-I. And you will see who's using these specially designed whole life policies, because it's not just me. It's not just Shauna here. It's the banks. They're using the one thing that you should be using, but they're never telling you about it. Why is that? Because they can't make any money off of you by having you do what they do. Start doing what the wealthy do. Treat your money the same as you treat their money. I know I'm repeating that over and over, but you got to drill this into your mind. Stop listening to the gurus that know absolutely jack shit about investing and about how to actually put your life in a better situation. I hope you guys enjoyed this video.